What exactly will investors be getting if and when they buy stock in the soon-to-be floated company Alibaba? It's not exactly clear, and even the company admits their books might be not up to snuff. WSJ's Michael Rappaport has the cloudy details. Michael, thank you for joining us.
Good to be here.
You've been doing the oh-so-exciting job of going through gazillions of pages of documentation from Alibaba, and you found something that even the company is warning that maybe their accounts might not be up to snuff.
Well, what the company actually said is that investors might lose confidence, that's their exact words, in the quality of their financial reporting because of U.S. regulators have not been allowed to inspect the auditors who audit Alibaba's books. That's the Hong Kong affiliate of PricewaterhouseCoopers. Now, this ties in with a long-running dispute between U.S. and Chinese regulators over how much authority the U.S. should have in terms of going into China and exerting oversight and authority over the Chinese auditors and Chinese companies. As a matter of course, U.S. regulators take a look at audit companies that trade in the United States.
And Alibaba, to be clear, Alibaba is going to be trading on a U.S. exchange.
That's right.
And when you come to the U.S., the regulations for disclosure is what they call it, are pretty stringent. You have to have good auditing. The accounts need to mean what they say they do. And that is really the worry here, isn't it? That will the accounts actually mean what they say?
Well, the worry is that PricewaterhouseCoopers Hong Kong, Alibaba's auditor, has not been inspected by U.S. regulators as most other auditors that inspect U.S. traded companies have, because China will not let them in. It's a question of sovereignty. They do not want to let U.S. inspectors in, and so investors have no way of telling how good the audit is, and by inference how good Alibaba's numbers are.
And that's got to be a worry when you go in. I mean, a lot of people have worries about some of the numbers with U.S. companies, and they say, I'm not sure about the accounting here, but in general, it's fairly clear what they've done if you actually read the report. And a lot of investors don't read the report, but many do. So what do you think? Do you think investors will say, hey, it's a big company, great market share, it's a great story, but I just don't know enough, I'll put my money somewhere else?
I think it's something that investors will take into account. The PCAOB, the Public Company Accounting Oversight Board, the U.S. regulator in charge of this, has pushed to get into China because they know, they say it's a matter of protecting investors, of making sure that investors know that a quality auditor is auditing a company's books, and to make sure that auditor has fixed any problems that they might have.
Okay, and there's lots more in your story on WSJ.com. Thank you very much, Michael Rappaport of the Wall Street Journal. Check that out.